Okay, let's get this started. It's the stockpickprofits.com market update for July 3rd, 2018. It is America's birthday tomorrow. Happy 242nd birthday. So while everybody's signing on, we'll kind of get the disclaimer stuff out of the way, right? Always read the disclaimer. Past performance is not an indicator of future performance. We are not registered investment advisors. We're not certified. Anything we say should be taken as entertainment purposes only. Read the disclaimer. Okay, that's a good habit to get into. So we're going to give everybody a little chance to sign on while we have a little coffee and check if there's any late breaking news that we can cover. So, okay, let's get started. So first of all, this is the stockpickprofits.com market update for July 3rd. Today was a short session on the market, right? Closed at 1 o'clock New York time. Pretty much what we called yesterday. We had a little pop in the morning and it was real nice. And then everybody kind of went out for the holiday, right? That's what we expected. So it's nothing surprising. Let's go ahead and move on kind of towards the day. So it was a sluggish day. You know, the market started out real nice, but there's just not a volume push on a day like today. So what happens is you see people come in, they start taking up their positions, and then they leave for the day, right? Everybody wants to start their July 4th weekend, and who can blame them? We're just starting the second half of the year, and it's been quite a first half, right? It's been a lot of work. It's been a lot of fun. You know, it was a good start, and the market's checked out for the holiday, and you can't blame it. And you can see it in the chart. We'll talk about the chart in a few minutes. But it just started out real nice. Everything was going up, and then all of a sudden, kind of the wheels came off. And really, that was for no other reason except volume just sucked out of the market. So we expected that. And Caterpillar and Apple were really the drags on the market today. Caterpillar, a major stock on the Dow Jones, right? Big contributor to that. So when it moves one way or the other, it moves the whole market with it. Apple, no different, right? Apple's your big tech stock. The big story today was Tesla got pounded again. Now, all you locals out there will know what we mean when we say Tesla got pounded. Ask Tala what Tesla got pounded means. So it was down about 6-7%. But it was funny because they just hit that 5,000 car production standard that they were trying to hit, and it just killed the stock. But, you know, just as we were coming on, a story broke on CNBC about Tesla stopped the break and roll test as it pushed to hit the Model 3 goals. Let's share that article with you. It's an interesting article because you have to ask yourself, is Tesla cutting corners on safety procedures in order to meet these production demands? If they are, that's a really bad formula, right, for a car company. So is there a short in there, or should you be picking up positions? You know, that's a good question right now. As far as we're concerned, Tesla's kind of like a step back, wait and see right now. Friday, we have some car tariffs hitting, and we're going to see how that affects the auto industry. It could be good, it could be bad at this point. It's really hard to tell. So we'll kind of keep an eye on that. And we'll let you know. And, you know, the markets overall, after that nice green start, you know, the Dow ended up down about 132 points. A lot of the drag was Caterpillar. The S&P ended up down about 14 points, and the NASDAQ was down about 65 points. Now, this is after a nice start to the day. So, you know, the Russell 2000, now a lot of people will tell you that the Russell 2000, that's your small cap stocks. In order to have a major rally, you have to have it fueled by your small cap stocks. It's just like the economy of the United States. What happens is small business drives the economy, right? Your small entrepreneurs and stuff, they drive the economy. And no different with the stock market. If the small stocks start taking good action, generally it'll lead to the big stocks starting to carry the same sentiment. So that's an interesting conundrum there, you know, and the VIX was up, but only about 54 cents, maybe 3%, nothing really, still stuck around that 15-16 range. If you're a VIX player, I don't know if you guys ever heard about this guy, 50 Cent, not the rapper, not the entertainer. We're talking about a stock trader, and what he is he's Mr. VIX. He puts these $1 million bets on the VIX, and he's been wrong most of the time. But the way he puts these bets, he only has to be right once, you know. And what happens is he puts these big bets on the VIX, and he bets sort of the big moves. And right now he's probably not doing very well because the VIX isn't moving proportionally. But it's kind of a curious story. If you ever get some time, go Google him. 50 Cent, the investor, not the rapper. Okay. Let's go to our Peter Lynch. Remember, we're going to do Peter Lynch for the week. So let's kind of roll into that because it's kind of a cute one. And one of my favorites, and I remember when he said this, go for a business that any idiot can run. Why? Because sooner or later, any idiot probably is going to run it. I love that, man. I love that. And it's true, especially back in the 90s when we were traders and stuff. You know, you saw a lot of changes in CEOs. I remember when what's his name over at Microsoft? Gates. When Gates stepped away from that CEO spot and Ballmer took over. Oh my God, it was just a mess. Ballmer, a couple times, he made these silly statements in public and it crashed the market. He was really the biggest enemy of his own stock. He kept running his mouth and stuff. And it was just funny. And it was so true of this statement. And we'd all talk about it, right? Go for a business, buy a business that any idiot can run, because sooner or later, an idiot's probably going to run it. And you want that defense. So fortunately, Microsoft has done very well since those days. And speaking of your big tech stocks, Google's cloud CEO resigned today. She just started less than a year ago, actually a very smart lady and stuff. So we have to keep an eye on Google and see how this plays out, right? Because right now, cloud computing is the big thing with trades. That's getting to be a crowded trade on the cloud trade, or a crowded trade on the cloud trade, excuse me. You know, it's really interesting. So we'll keep an eye on that too. And, you know, we're going to talk a little bit about something gold a little bit, you know, in a few minutes, and we'll kind of relate that. But, you know, and like we said, first of all, let's get the old Happy Birthday, America out. This is one of our favorites. One flag, one land, one heart, one hand, one nation, evermore. Look, it's ugly times right now, right? It's really ugly times. And people are either all in for Trump, all out for Trump. You know, there's all this stuff going on global stage. Excuse me. Coffee hit me wrong. But all this stuff going on a global trade wars, the whole stage, you know, the North Korea thing, the Iran thing, the changing of the administrations from Obama's administration to Trump's administration. It's just been, Twitter has just been frightening. As a service, we don't even go on Twitter. None of us have Twitter accounts. None of us even go on it because it's just so inflammatory. But the bottom line is 242 years later, after they made that little piece of paper that's so important, we are still one flag, one land, one heart, one hand, and one nation. So let's embrace ourselves for each other for a day. And for all you visitors from other countries, let's embrace our friends from other nations. Let's just embrace, okay, for a day. Let's take 24 hours away from all the bullshit. And let's kind of move on. So let's talk about the market, because that's what we're here for. Anyways, happy birthday, America. Let's talk about the market, because you can see we're still kind of working off that right shoulder. And that's been our concern the last few shows. We've been talking about it. Can we get off that right shoulder? Which way is it going to break? And that's the big question right now. So that kind of rolls into something that we're going to talk about. And we'd like to talk about gold today because one of our clients, one of our wonderful clients had asked this question of the team so they passed me the note a few minutes ago. And so I'll address it. So gold, is it a hedge or an investment? And how does it play into things? I mean, really, what is the purpose of gold in your portfolio? Why would you hold gold in your portfolio? Why would we take up a gold hedge and basically 25 points lower still be in that gold hedge? There's a very good reason. Gold, now, for myself, I'm older. I remember a time when gold was just a critical part of your portfolio. And you guys probably watch CNBC and stuff, and you see the commercials with the guy William, I think Harrison. But he always talks about, the imminent crash of the dollar, global wars, things like that. The one safety valve is gold. And we believe that. We still believe that gold, even though it hasn't shown it, and like over the last year or two, you've had a lot of talk about how gold and Bitcoin might be correlated, right? Is Bitcoin the hedge for this generation or this group of traders? We don't believe that. Even though gold's been kind of trickling down and stuff, we think it's an indicator that there is a big rally coming in the market. People aren't taking that safety valve. And we like gold as a hedge, because what if Friday, when these tariffs come out on autos, the market just tanks, right? Where is people going to put their money? If they're pulling it out of tech, if they're pulling it out of banks, which they've been doing for the last 2 or 3 weeks, if they're pulling it out of anything, where do you put your money? Do you just sit in cash? Well, the smart investors, you always hear this talk about going to cash. Going to cash is a temporary event. It's not something, you don't stay in cash for months. You don't stay in cash usually for weeks. We've talked about it before, that this is becoming a stock picker's market. It's not a market where you can just throw a dart at a board anymore. You've got to be able to pick good stocks, and you've got to be able to pick stocks that a lot of times are going swimming upstream against the trend and things like that. You just got to be smart. What'll happen is, what happens if the bottom just comes out? Where do you put your money? So we like gold, and we think it'll prove true. If something like that happens, if there's some kind of economic catalyst or big event, we think people will rush into gold. Today was a good example of that. I mean, we're getting a little bit closer to tariffs rolling in and stuff. Yesterday, the catch-up war, remember we talked about that, the catch-up wars. Yesterday, where the big articles on CNBC were about Heinz and things like that. French is the big competition, because Canada just levied tariffs on ketchup, right? And so now we've got these tariffs that are going to kick in on autos on Friday. So what if all this kills the market? What if we wake up, markets down 2,000, 3,000 points? Have you thought about that? Do you believe that it can't happen? Because if you do, then you're a fool. It can happen. And so people will tell us things like, oh man, that gold hedge is down 85%. Why didn't we dump it? No, we're going to keep it. And what we do is we're very, like we say, we are very experienced traders. So we've been to, this is not our first rodeo. So what we do is we take up that gold hedge and we sit on it, right? It's our protection. And then say gold trickles down like it has. Well, at some point, gold's going to find a bottom and it's going to move. And at that point, we'll put in a shorter term play. We'll recoup the money that we put into the hedge. We'll reset the hedge and we'll just take a little profit on the play. Very simple. It takes a little managing, but it's a good way to keep that hedge in your portfolio. So when you ask, what role does gold play in your portfolio? We feel it plays an important part of your portfolio. And you should always, I mean, not 100% of the time, but for the most part, you should always have some kind of hedge in there for gold. Now, when the market's racing up to new highs and you're making all this money on stocks, right? On whatever you're playing, options, ETFs, stocks, and you're making all this money. Now, you don't really need to have the gold hedge. Maybe there's nothing that you see. So you're kind of looking for points to put your gold hedge, and you want to set it 3, maybe 4 months ahead, and you want to kind of just let it sit there. And then you watch it. Well, if for some reason the hedge goes up and you make a profit, absolutely, you take profits. Nobody ever lost money taking profits. Always remember that. it's always easy to look at the other side of look at your neighbor's yard, right? And think, oh, his grass is so much greener than mine. Don't ever feel like, oh, I took a 22% profit on this play. Oh, these guys made 70% on the profit. Oh, I feel bad. No. You made money. Feel good. So you're making a profit. Like I said, nobody ever lost money taking a profit. So if it does accelerate, then you cash it in, and then you look to reset it. But if it does do like it's done over the last this recent gold hedge, all you do is keep an eye on it. Like today we had about a $10 push, $15 push on spot gold. Spot gold is the price of gold, and that correlates directly the price of GLD, which is the ETF that we like to use for our gold plays. The price correlates directly with spot gold. Now, if you want a good place to check gold and read about gold and get more information on gold, there is a fantastic gold website. You guys go in and check that out. It's kitco.com. They've got all kinds of news about gold. They actually are pretty much into all commodities. So even your oil information you can get from there. So if you want fun reading, maybe over July 4th. If you're a stock bug like us, look, we sit here as a trade team and we shout at the office, enjoy the holiday, go take. But we'll spend the holiday reading a Kitco and stuff. That's a good time to, the market's not trading. There's not the pressures of watching tickers and things like that. So it's a good time to catch up on some study reading. And we like Kitco for that. So if you guys are looking for something to kind of talk about Kitco, you can use that. So I just want to look at this note that they passed me about the question. I just want to, we love gold as a hedge. If you ask Samuel and all the kids in the office, Laura and all them, they'll tell you I'm a big gold bug. I'm always watching gold. I'm always reading about gold, and I've always been kind of, I guess you could say, infatuated with the commodity. But we've been very successful. When we were first working on Samuel's portfolio in the beginning, our first 2 wins were actually our first 3 wins that started turning the portfolio around. Where we played QQQ. We played GLD, and when we hit a big one on oil, OIH. And those are actually, when we play ETFs, we like to play the big ones. And what those are is we like to play the commodity ETF, which the commodity ETFs, which are your GLD and your OIH. If you're looking for other oil ETFs that are easy to play, USO is one of them. That's actually a stock, but a lot of people treat it like an ETF. And it's a popular trade for oil, but we like OIH because then you get a kind of a basket of oil companies and stuff with it. And same thing with GLD, right? Rarely we pay the individual miners and stuff like that. We like to just cover it. And that's another lesson here along with this gold lesson is that, if you're not sure, ETFs are a great safety valve for people that aren't sure. Like if you're sitting there and I know there's going to be a move in banks, right? But I just can't figure out which bank to buy. Well, you just go buy XLU, right? XLU is not XLU, XLF, which is the financials ETF. Now, don't get your ETFs mixed up because XLU, XLF, and XL, I think there's an XRT, which is the retail. But, there's an ETF.com, where you can go read about ETFs. But as far as gold, we love gold as a hedge. And we also love it as a play, too, a short-term moneymaker. So that's how we'll handle this at this point, because this trade went that way. About 3 months ago, we put the gold hedge into the portfolios. It's kind of trickled down. So now what we'll do is we'll look for a bottom. We'll hit a quick option play to recoup that money. We'll reset the hedge for a couple months down the line. We'll keep a little bit of profit and we'll play it like that. But we will keep gold in the portfolio as a hedge right now because there is so much. As long as this trade thing is going on, this negotiations and I guess trade war, as long as this stuff's sitting on that horizon, what we'll do is we'll keep that gold hedge just in case. Now, some of you might be asking about Bitcoin. We don't play Bitcoin. We'll talk about it when questions are asked and stuff, but we don't think Bitcoin is a good investment for anything. So let's roll down. So that's the way it was, and even the show, right? You can kind of feel it today, man. It was just a sluggish day. Not a whole lot of people showing up right now. They'll probably watch the show later on, but it just was that kind of a day. And you could see it in the market, right? The way the market started off. It started off like a banshee, just came right out of the gate, was running, everything was looking good. And then once we hit lunch and a little bit after that, it just kind of trickled. The volume just sucked out of it. And then the market just went. Caterpillar and Apple were the two drags on the market. Caterpillar is a big Dow component. So anytime it moves, the Dow will move with it. If you look at a Caterpillar chart, it really took it in that second half of the market too. Apple got pounded. Tesla is a big conundrum right now, right? Tesla, which way do you go on this trade? Post it in your comments and stuff. What do you think is going to happen with Tesla? We're taking a serious look at it right now because there might be a trade in there, but it's just so hard to read. Remember again, don't trade on innuendo and BS. Trading on rumors, okay. Now, I know that's a fine line, and we'll talk about it in later shows and stuff. But there's a fine line between trading on a rumor and trading on innuendo and BS. So that's kind of a trick you pick up with experience. Let's kind of do a little bit of Peter again. I picked Peter Lynch for this week. I was telling the team, I picked Peter Lynch for the feature quotes this week, and we've got them set up for the rest of the week too. But it's not so much as saying these intricate, complex life solutions that like a Warren Buffett. Peter Lynch was more of a tongue-in-cheek kind of quotes, right? And this is one of his most famous, and it's go for a business that any idiot can run, because at some point an idiot's going to run it, right? And I'm sorry, Steve Ballmer, but I always remember that when you took over for Bill Gates. And if you guys want to read about that, it's funny. I forget what it was that he said that it just screwed up Microsoft for about 2 months and stuff. And then, the soft news is Tesla got pounded. The Google Cloud CEO resigned. And then we talked about gold as a hedge for an investment. So look, you guys go out and you enjoy your 4th of July. Okay. You guys go out and you guys have a great time. Market opens up. We'll be back 9:30 in the morning Eastern time for stock market, 3:30 a.m. Hawaii time. Lucky us. You guys go out, enjoy the weekend, kind of clear your minds. That's what these holidays are. It's nice to have a break. We don't really like having a holiday in the middle of the week because it kind of throws the flow of things off. We lose a day on contracts and things like that. But it's a nice break right now because we just started the second half of the year. We're starting out pretty good. If you don't count the afternoon, we're starting out the second half of the year pretty strong. Now, you guys are probably wondering about banks because we've been talking about banks, and we'll close with banks before we start taking questions. Yeah, it might already been run by an idiot. You never know, man. But let's close with banks, because banks, man, have been a beat up trade right now. It was a real crowded trade there at the beginning of the year. It's kind of thinned out, right? And banks have been just trickling down. We're in, as always, we like Bank of America. You guys know that. And then we're also in a smaller bank, a regional bank. We think the regional banks will be the real superstars, but we think the banks, as we start rolling here into the second half of the year, will start picking up some steam. It was just a crowded trade. It was a trade the news kind of thing, right? With the stress tests and with the Fed announcements and stuff like that. So we want to we don't want to get gun shy with this trade and stuff. So we're still bullish on banks. Okay, now we've got a couple positions going. We're looking at other positions, and we will make money on this. It's just becoming a little bit of a patient trade. So that's all. So hey, let's go down and check out the questions and stuff. So yeah, no problem, Savar. Gold, man. Gold's an important part of portfolios. It really is. It really is. I know you read a lot of it, and you're no different than anybody else. You just you read about it, and a lot of the flow of these articles is gold's unimportant. And when you start believing that, I think you're making a big mistake as a trader. Gold's a great asset to trade. Jesse's here. Welcome, Jesse. Hope you're ready for the weekend. And then back on the subject of the Peter Lynch saying, right, go for a business that any idiot can run, because sooner or later it'll be an idiot that runs it. Savar, yeah, maybe it's already run by an idiot. You never know. You never know. You know, some CEOs just get lucky. they get in charge of a business that just can't fail, right? And then some CEOs are superstar CEOs, and they get put in a position where there's just no way to succeed, right? So it's not always fair to judge the success and stuff on of a company on the CEO, but it's a big part. And like I said, you know, it's just like with Microsoft back then when Ballmer, I use that old story about when Ballmer took over for Gates, when Gates stepped down from the CEO position. I use that, but you look at Microsoft. I mean, Microsoft, that was a buying opportunity, right? It was a fantastic buying opportunity for Microsoft if you like the stock. So how did you look at that when it happened, right? How did you look at it when Ballmer came out and he said something and the stock fell apart and the market kind of fell apart, and everybody's like, oh my God. What were you doing at that time? I think back to that time, I don't remember making a play on it or anything, but I know a lot of people did make a play because they were buying Microsoft. So when you see something like Tesla, okay, you've got a CEO that's kind of running rampant, right? With these internal emails. Musk is sending internal emails about saboteurs and stuff. You see they meet production quotas that they've never met before. And then all of a sudden an article comes out saying they skipped the break and roll test. Are they corner cutting on safety procedures in order to get these cars on the road? There's a lot of questions you have to ask, you know what I mean? And so be careful with that. If you realize that Microsoft was much bigger than Steve Ballmer and you bought it at that time when he made that statement, you would have been very happy. But would that be the same result with Tesla? So happy 4th of July to you also, Jesse. Happy 4th of July to everyone out there. Like I said, whether you're an American or not, let's celebrate. Let's have a good time. The more, the merrier. Let's go out and celebrate, the 242 years of madness. 242 years ago. Can you imagine them, what they were thinking? I mean, if they saw the country today, the way things are and stuff. But you know what? We're a proud bunch, us Americans. And so God bless you all. Have a happy 4th of July. We're going to close the show out. Remember, Friday trading, excuse me, the brain's on July 4th already. But, remember, markets back open, full session on Friday. We'll be back we'll be back about a half hour after the market with the show. So going into Friday, make sure well, it's too late now, but you should be positioned up and stuff. We'll get that nice Friday trading day. Let's see how that goes. We've got some economic news coming out there. Like I said, there's some tariffs that'll kick in on Friday. Let's see how that affects the auto industry and stuff. Are you playing any of the automakers? We're not right now, but we're watching. So you guys have a great 4th of July weekend. We will be back on Friday. Okay. Again, thank you all for your support and aloha.